Good evening. Ira Epstein with your metal market wrap-up, and this wrap-up is for Wednesday, and we are now at the 2nd of March, 2022, 6:35 p.m. Central Time. Now, before I go anywhere, I want to bring this up. Tomorrow is when we're going to have our live webinar. It's called, as you know, What's Up? And it's new from me because you'll be able to come in tomorrow to a webinar, ask all the questions you want on spiders, ETFs, stocks in the futures markets. You can join in a number of ways. If you don't have the invite by now, it means you're not getting it. I have sent it out 3 times to everybody in our database, which means you just take your cursor, you move it up right here, you will see an icon appear, click on it, and that is how you can register going forward. Is that simple enough? That's the way I want you to do it. All right, so as we take a look at what's going on in the markets, down a little bit tonight. You had a good-sized rally today, but was that no more than a relief rally? I question if it wasn't in the stock market. You're still acting good, and the copper market's acting phenomenal still, but it is in key resistance. Be a bit careful right here. Dollar finished up a little bit, and it's a mixed bag in the currency markets. Fed Chair Powell spoke today, and if you were listening to him, he was very clear. He's all in favor of a quarter-point hike at the 15th meeting, March 15th meeting. He opened the door to a half point, but it would take a lot to get him to go there. And I don't think the market is there for that to do it because of the Ukrainian situation. We don't know where we're going to be in 10 days, 12 days from now. So I think the Fed will play it very coy. The inflation numbers are coming in hot. The Fed sees it. But he made a point. He still thinks they're being elevated by a mixture of the supply chain issue and, of course, what's going on in the Ukrainian issue and people returning back to work. Labor pressure is certainly still on. When you take a look at the gold chart, you can see how the market has spiked to the upside. As I told you, I would not be surprised if we want to head back to this $2,000 level. That is still a target that I have. The trend continues. You get these corrections, and then you come back up in them. The pattern is still one of higher lows, higher highs. To break the uptrend, you'd have to take out this low way back there. Now the moving averages keep moving up, and we're just about to the point where the 18-day average is now over this low. What was that low? That low was 1678.60. We did it. You can see here it's 1676.20, and tonight the average has finally climbed. So if you fell back there, here's what I'd say. I think that's where the pros are waiting to buy the market. They'd probably have stops under that 1678 level. They'd risk in between there to see if the market is holding on. In terms of resistance, well, you keep hitting it. You hit the upper black bands. Remember the concept of a Bollinger Band. You will trade within them, not over them or under them 95% of the time. It's a logical resistance point and a logical support point on the breaks in the market. One of the tools. And we have our enhanced Bollinger Band course, as you know, for you to work with. Then and I'll put that ad at the end of this so you get to see that again. In the momentum of the market, if you take a look, you're no longer overbought. This little bit of a pullback has pulled the market to the point where the pros could start nibbling again on the long side because the market's not overbought anymore. In terms of the gold-silver ratio, you're continuing to stay down, which means silver gaining a little bit on the gold. And you see that here with the higher lows, higher highs, going right into the upper Bollinger Band. Now, here's the difference. Gold is backed away from that upper Bollinger Band. Silver's still leaning into it, which means the silver keeps gaining on the gold-silver ratio. It's one of the ways I look to see what is going on. What I don't like is the market is very overbought. So from a technical point of view, think of it this way. I used to be a pilot, not a very good one, by the way. I was a race car driver, too. You could look at the end of the course, and that was me. And I was open-wheel racing, and this is all in my youth. But what I learned are techniques, and you don't break them. And one of the things I've learned is when you have an indicator that is telling you don't do something, it's like before you take off in that airplane, you have a checklist. Well, gee, I'm checking it all off. I don't have fuel. Why am I trying to take off from the runway? Same thing. You get overbought, let it either embed or correct that. That's the way that I look at it. In the copper market, you have a lower low, a higher high. I should put up some of those pictures when I was racing and all that. Believe me, I was the world's worst racer. F1 never had a thing to worry about, but I loved open wheel racing. Higher highs, higher lows, going at the upper Bollinger Band. In the platinum market, a lower low, higher high, just sort of drifting around here at that 18-day average of closes. I'll call that pretty neutral. The palladium is still where the bull play is, but do you ever buy over a Bollinger Band? Let me use this word carefully. Never. So I'd look for the market to give you corrections before you want to come back in. I don't think anything's going to change in the Ukrainian war anytime soon to take away the overall bid in platinum palladium because they come out of Russia. So those are things you have to consider. The dollar, staying over an upper Bollinger Band? No, I don't think you're going to attract professional buyers. I think they put into their algorithms, whatever, certain things where they say, no, we can do better than buying over that level or selling under a level. Trend is up. Overbought, still a very powerful market, not backing away from that in any way, shape, or form. So I want to repeat, and I'll take that off. If you're looking to come to the webinar, click up here. If you want to learn about one of the greatest courses I think I ever created called the Enhanced Bollinger Band course, watch this. Welcome. I'm Ira Epstein, and I'm here to talk about my Enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein on the road to your education.